All right, let's talk about one of the most interesting industrial companies you've probably never even heard of, Goodwin PLC. Now, on the surface, it's just a 140-year-old engineering firm from the UK. But, when you peel back the layers, you find something incredible. A company that has quietly become a critical strategic asset for the entire Western world. And this gets right to the heart of the whole story. It just doesn't seem to make sense, right? How can one single company master two completely different worlds? One, the most delicate and intricate, the other, the most powerful and demanding. It's a paradox, and we're going to unpack it. And this slide just lays out the sheer mind-boggling range we're talking about. On one side of the business, you've got this super fine powder. It's literally the global standard for making gold rings. And on the other side, these colossal 29-ton iron boxes built to hold radioactive waste for hundreds of years. It is an absolutely wild story of transformation. So who is this company? Well, Goodwin PLC got its start way back in 1883. It was a foundry, right in the heart of industrial Britain. And for more than 100 years, it was a solid business. Maybe a little bit boring, a little cyclical. But the really interesting part is how this family-run company completely reinvented itself. The big turning point was in 2014. The price of oil just fell off a cliff, and Goodwin, which was really dependent on the energy sector, was suddenly in a very dangerous spot. But instead of panicking, the management made a really bold move. They decided to pivot, to move away from those up and down markets and go all in on sectors with huge barriers to entry, sectors backed by governments. This timeline really shows you their game plan. This was not some lucky break or an overnight success. No, this was a decade-long bet. They poured over £73 million into upgrading their foundries, developing new tech. And now that massive bet is paying off, big time. We're talking a record-breaking order book and a forecast to literally double profits in a single year. So how in the world did they pull this off? Well, they positioned themselves perfectly to ride three huge long-term trends. You could call them super cycles. The first two are what you might expect now, defense and nuclear cleanup. But it's the third one, their surprisingly profitable legacy business, that actually built the foundation for this whole thing. So first up, defense. With global tensions on the rise, both the US and the UK are in the middle of a once-in-a-generation upgrade of their nuclear submarine fleets. And let me be clear, these aren't just any old projects. They are the absolute #1 priority for national security. And Goodwin? They're supplying critical, super strong components for all of them, making them an essential piece of the whole AUKUS security pact. And if you need proof that they're playing in the big leagues, look at this. They signed a strategic deal with a giant, Northrop Grumman. A deal like this is a massive stamp of approval for their technology on the world stage, and it basically locks them into the US defense supply chain for decades. Now, you're probably asking yourself, why can't someone else just do this? Well, the short answer is they can't. It can take up to 10 years, a full decade, just to get the necessary nuclear safety certifications. You also have to have the massive machinery needed to pour 35-ton castings of exotic metals. And once your component is designed into the safety blueprints of a nuclear submarine, the cost and hassle to replace you is just astronomical. It is an incredible competitive moat. All right, let's move on to the second supercycle, nuclear cleanup. The UK has this enormous, multi-decade project to clean up its old Sellafield nuclear site. A huge part of that job is safely storing all the waste. And to do that, you need a very special kind of container. It's called a self-shielded box. And when I say special, I mean it. Each one of these boxes is a masterpiece of heavy engineering. They weigh a staggering 29 tons. To put that in perspective, that's about the weight of 5 large elephants. They're cast from this special iron and then machined to incredibly precise standards so that they can hold nuclear waste safely for centuries. And here is the real kicker. Goodwin is the only company in the entire United Kingdom that can make these specific boxes. That gives them a monopoly on a government contract that's going to run for years and years, providing a super stable, predictable, and very profitable stream of business for their foundry. So, you have to be wondering, how did a family-run company from Stoke-on-Trent get the money to make these massive, decade-long bets on nuclear and defense? Well, the answer is in the third, and honestly the most surprising part of their entire business.
Remember that jewelry powder from the very beginning? Well, it turns out Goodwin absolutely dominates the global market for it. They have over 50% market share, and it's an amazing business, super high margins, and customers almost never leave. I mean, think about it. If you're casting thousands of dollars worth of gold, are you really going to risk it on a cheaper, unproven powder? No way. This division is the group's secret cash cow, and it paid for the entire transformation.
But they're not just sitting back and counting their money. Nope. Goodwin is now making its biggest and boldest bet yet. It's an internal startup called Duvelco, and it's designed to take on one of the biggest chemical giants in the world in a billion-dollar market for advanced materials.
So to get this, you have to picture the battlefield. For decades, DuPont's product, Vespel, has been the king of superpolymers for tough jobs in aerospace and semiconductors. Goodwin has spent years developing and patenting its own version, called Ducoya, which they say performs even better. They're not just trying to compete here. They're trying to completely disrupt the market.
And this isn't some little side project. Just listen to this quote from management. They believe this new venture could become the biggest and most profitable part of the entire company. That shows you just how huge their ambition is. This is the speculative, high-growth, blue sky part of the story. Okay, so whenever you have huge rewards on the table, you've also got huge risks. Let's take a look at the numbers behind this story and, the key things that anyone watching this company would need to keep a very close eye on.
First, the reward. This chart says it all. You can see the dramatic inflection point the company has just hit. That decade of hard work and investment is now leading to an absolute explosion in profit. They're forecasting it will double in just 1 year. This isn't just steady growth. This is a fundamental step change in the company's ability to make money.
This table gives us some really interesting context on how the market is thinking about this. Goodwin's stock trades at a premium compared to its old industrial peers, which, makes sense given its insane growth. But it's still in the same ballpark as other high-quality, specialized engineering firms. It suggests the valuation could be justified if they keep delivering. So who's making all these big calls? Well, the founding Goodwin family still owns a controlling 53% stake in the company. And that's really a double-edged sword. On one hand, it allows them to have a really long-term vision without worrying about short-term market noise. But on the other hand, it means that minority shareholders have very little say in where the company goes. And that brings us squarely to the risks. You have to be aware of them. Their success is very concentrated in just a few massive government programs. That high-stakes bet on Duvelco, it absolutely has to work. And their entire defense business relies on Western defense spending staying high. These are all significant things to keep in mind. So when you boil it all down, the real takeaway is this. The Goodwin story is just a powerful case study. It's about how a company with deep industrial roots can use a long-term vision and a hidden cash cow to transform itself from a regular, cyclical manufacturer into a genuine strategic asset for its country and its allies. And that leaves us with this one final, fascinating question to think about. As Western countries try to bring critical manufacturing back home and rebuild their industrial base, is the Goodwin playbook, blending old-school heritage with high-tech, government-backed demand, a model we're going to see more of? Is this just a one-off amazing story, or is this a sign of what's to come?